Notes, bonds. This has been in a free fall for a while, guys. Today we're going to cover the US Treasury notes, 2-year, 5-year, 10-year, and the 30-year T-bond. What is happening with that, guys? Look at that. Ooh, like a U. Inverse U. But is the trend over? Well, you're so close. You're hitting that 12-month moving average right there. This is very, very embryonic. These are the early stages. What I like to see is first a close above the 12-month moving average to say, okay, you don't want to be short anymore. Then a bounce back down to that monthly defined resistance or support, and then break out, and then make bigger patterns. Just like I said, when you've been in the downtrend for a while, and you want to know, well, where's my next monthly defined resistance? Well, go back up. When you hit green candles, that's where the monthly closed happened. That's when the market said, look, the price action was above it during the month, but the sellers came in. That's the best. That's what the market thinks the close should be for the month. For me, it has a lot of weight, has more weight than on the weekly, than on the daily especially. And it's still visible. So you draw those lines, and when you zoom in on the weekly, and you get bounces off those levels, and you say, what's happening? Well, you're actually hitting monthly defined support, guys. And if you have a breakout, you think you have a breakout on the weekly, make sure it closes above that line, because that could just be noise. That could be weekly, daily closes above the weekly defined breakout line, the monthly defined breakout line, and just it's going to sap back in and close below it. So right now, we're above that first level embryonic breakout on the monthly candle chart. It could close below in December, a few days left, so that would be a push. That means there's no breakout. But still not total weight of evidence, not something you want to play yet, because the 12-month average is still going downward. So you want more price action above the 12-month average. You want it to flatten, and you want a bigger base. Just like you had a big, long base here when this dropped, you want a big, nice base here before it explodes to the top side. Outperforming the SPX for a while. A lot. You're starting to get good signs. You get volume here. Break out the volume above twice average volume the previous 4 weeks, above the monthly defined breakout line. But if you're looking at total weight of evidence, you're still not out of the Ichimoku cloud. So you're going to need really that action to continue sideways and even above the 30-week average to start dragging it upwards. You see that it's gray. It's because the price action is above the 30-week average. You're outperforming the SPX. But you still don't have an inclining 30-week moving average. And until you have that, this is still a stage 1. So stage 4 has ended. Price action is above. You're not in stage 4 anymore, like you see in this red one. You're in stage 1. But you're still not stage 2 breakout, where it's going to go to the upside in a sustained higher percentage chance to have a successful trade. This could range for a while. Not quite there yet, guys. But definitely looking that it wants to, that it's bottoming right there. The 5-year T-note resembles pretty much like the 2-year monthly defined support. And the more these green candles are close, that test that same monthly defined breakout line, the more I trust them, like right here. Tested once, tested twice, and even here's, I kept breaking out. Well, price action came back down. He still had the 12-month average giving weight, bring it down. So all those pullbacks. That's what's fun about volatility. Volatility in a stage 1 or 3, you don't want to see it there. You want your stage 1s to be tight, and then explode. Volatility in stage 3s is just going to whipsaw you to death. but you want volatility in stage 2s or 4s. It gives you entries. So let's say you go down, that volatility. After that, you get the price back up. You get a chance to enter right here. And this would be a nice continuation short. Right. Ooh. Right here. You gapped out. You close above 12 average, or you don't want to be there anymore. Stayed above. The month closed back below monthly defined support. That's a beautiful sideways consolidation move, stage 4 decline on the monthly chart, a higher trend. And after that, for months and months, 1, 2, 3, 4, 5 months, kept going down until now it's slowing down. And then it's you're above 12-month average. Should not be there anymore. Should have covered whatever short you had. Weekly, outperforming this PX, but look at that. The 3-week average has actually started to incline, guys. So the 5 years looking better than the 2-year. You still have all that overhead resistance though before you scream victory. You have that last slide. You have some more monthly defined support right here. Resistance. Sorry, there's my dyslexia. So if you a close above out of the Ichimoku cloud would be an awesome base for that 5-year T note to really give it a upwards momentum. But until then, still bottoming, guys. Still in the stage 1. Don't get trapped. The 10-year, man. The 10-year monthly. Oh, look at that huge top. That's insane. Is that thing going to keep going down? Insane. Let's check less greedy of targets. So that actually could be, we're still in the stage 4 decline. But just like here, we're close above the 12-month moving average, starting to flatten out. So now we have to figure out, is this something that's going to continue to the upwards? Is that stage 4 on the monthly ending? Here are my levels. And now it's fighting for a bigger pattern. Targets from smaller patterns, launching to bigger ones. And then you see if they break, then they give measured moves to the upside. But right now, not quite piercing through, guys. 12-month average still going downwards. You don't want to be short anymore, just like you don't want to be short here. You have to wait for the price action, either go back below and then continue downwards, or after that you can zoom in on the weekly and get some details. Ooh, outperforming the SPX. Looks a lot like the 5 and the 2, guys, but a little better. So the 2 just started rolling over. 3-week average is not inclining. The 5 and the 10 are. Still has some way to go through that Ichimoku cloud to close above that monthly defined breakout line. So not quite there yet, guys. Embryonic. 30-year, the bond. Okay, let's jump to the monthly. Man, what do we have here, guys? Right here. Close above 12-month average. Cover your shorts. Should not be there anymore. Broke down below. Right here. Continuing its downtrend. Right there. Measured move reach. Sideways move. Close to that 12-month average. Now you close above again. So now, where is my monthly defined support? Here's the first level. There's another one close by. And this is the ultimate one right there. Lots of lines. Outperforming the SPX. You see those buyers coming in, those wicks, bring it back down. You're still not out of the woods yet. But the 30-year, I think it's the one that's the closest to get out of its Ichimoku cloud, or is that an illusion? Because I played around with the the 2-year hasn't even started going through. The 5-year just starting to go through that huge thickness of a Ichimoku cloud defined resistance. The 10-year already piercing through, and the 30-year just starting right there. So you see those sellers coming in, monthly defined, a lot of monthly defined support that you're running into. Here's the last level of monthly defined support, and after that you're out of the cloud. You want to get out of the cloud. Same thing here. No stage 2 breakouts yet. This is more of a stage 1. If you consider you were in a stage 4 going down, stage 1's base, but remember stage 4s can go in stage 1s and continue stage 4, guys. So I think we're gonna have to wait for the bonds, guys. But something definitely is brewing in the bond market. Those stage 4s have definitely slowed down, entering stage 1 territory. Early stages. Don't get trapped. This can continue down again. We just have to wait. Alright, guys. Thanks for watching. Bye-bye, bonds and notes.